Video 3 on 825, and we start with this yummy, delicious stock. No, this is a restaurant company, Sweet Green, and Wall Street hates it so much. They made a lower low. Once it lost $10, I would get out. Now, you do have a period of time now where you can rally back to 14. So if I'm long and I'm stuck and I get a burst back to 14, maybe I should reconsider my trade. Technically, you could go back to 20. That giant green M says you could go back to 20, but oh boy, it's going to be hard work. So just be realistic. Do your homework and know if you're trading or investing in all of this. You do have support, but it's sub $10. It worries me. Silver. So crazy what's going on in silver and gold. Look how elastic these things have been. And the Friday rally, like this was a crash. If you were watching it live, it was a crash. Same with this, same with that. Look how volatile this thing has become. So the silver move on Friday with gold was mind-blowing. I'm trying to see how they're going to trade around the high on the left. Like, okay, we got the mother of all headlines for some reason. Perception is reality. And the reaction in here was super violent. Are they going to require more headlines to continue, or do they have enough to continue the momentum on their own? That's basically the question for the rest of the market. But here, this is way too elastic. So something exciting is about to happen. We're either at 36.8 or at 33.3 at the end of the week. I mean, those are possibilities. And that's like an explosion in this small stock. Nuclear power. Why is this one not chasing the rest? Okay, it has support, but I like the support around 26 better, and 20. Technicals. I don't know much about the business. And rallies into 42 should be sold hard. Like you will meet sellers at 42. Harder sellers at 48. So it's not going to be easy to recover if they do. Synopsis. Not an obvious point of entry. It is a bullish flag. If they make a higher high, it probably goes to 730, but that's a giant if. So we'll see where that takes it. There are some sellers at 620. So the bears need to definitely stop them at 629. If you take out 629, you're playing with fire because the target is way higher. I don't think this is the kind of company that leaves a gap like this. So if it drops, flash drops, get long on a flash drop. Look at this. Look how elastic this thing is, and the P&L. Okay, so I take it back. The P&L used to be solid. It is on the yearly, but the quarterly is kind of crazy. Good company, buy the dip. Where? 575 matters, 550 matters, 530 or 525 matters. 75, 50, and 35. SOFI, not an obvious entry point. I wouldn't short it. Good business. It's growing properly. It's in the right business. I'm not so sure if the consumer has a hiccup. Will they be hurt or helped? I don't know enough about that business. Because if the consumer is going into a cash crunch, is there more demand for their services or less? So you need to do homework along those lines. Technically, this is not an obvious entry point. So if you waited this long, you might want to wait. And looking left, that has not been a good starting point. This is another one of those stocks where I can't stand the collective that trades it. We were trading it long anytime it dropped below 5 and 6. It was a slam dunk decision. But up here, it's not a slam dunk decision. So why are they so loosey-goosey with their estimates of this company? They love it, they hate it, they love it, they hate it, they love it, they hate it, they love it, they hate it. I mean, what in the world? They drop it 50% 3 times, and then what is that? 80%, and then another 47%, and another 51%. So easily, so frequent. Why? So by the next dip, you're probably going to get rewarded. Chasing the rip, if you are a momentum trader, just know what you're doing. Tempest, not an obvious entry point. For the same reasons. You're going into a prior fail that has failed multiple times. Okay, so this time is doing better than these other 2 times. but it still needs to prove itself that it can take out 92.50. Buy the dip. Somewhere around 85, you might get a dip into 70 zone. That's where you want to get long, because then they curl back up and they take off. If you have patience and you can't, actually, if you have patience, you should wait it out. But if you can't stand and you have a long horizon, then chase it. Maybe you get lucky with the breakout without a dip. Target. Credit put spread, yes. Shares, maybe, but why? And calls, definitely not. Call spreads, okay. And put them to work. Finance them by selling a put spread. I don't think I saw a lot of good premiums to sell on the dip, so I don't, not that excited about it, but it's definitely doable. If I own stock in Target and I still believe in it, I can stay in them. TOST, what did I do? Okay, good trend. Why not up at the market's highs too? Okay, sellers at 46, sellers at 47.50, 46 and 47.50, and vulnerable at 40. If you lose 40, which I think is a target, if you lose 40, you're going to lose another $3 to close the 37 breakout, and then you have better support. Tesla, don't ever short Tesla. So I can tell you, I went to Twitter to post something. Somebody posted some similarities in the Tesla now. Oh, volume. The last time Tesla did burst like this on volume, it had more upside. They said 350 coming. So that's a small. But I thought it was interesting, because if 350 is coming and they are technicians, why wouldn't they say that this could trigger a run to 400? Because it could. So if you're short Tesla, you should be mindful of it. You can short into a prior fail, especially that you have this kind of seller here and backup sellers here, and the sellers extend through 365. So know how to short it. But you should also know that the prevailing meme on Wall Street that is doing this, it's one of those things where it wants to go higher, okay? So they think that it's going to break out from 350. And if you want to short it, you can short it better as it approaches one of these two. But it is shortable in the sense where I can sell a call spread and a put spread, because it has a lot of buyers, and bias it bearish. So you sell a call spread and you collect $1, and you sell a put spread, you collect 50. So that's a narrow iron condor, but you have good resistance for the call spread that you sell and a good solid buyer. It's a lot of work, so you need a good stomach. Please know that you need a good stomach. It's not for everybody. This stock is we call it Stressla. And it does live up to the name. All right. Going into prior fails is not an easy long. Unity, talk about uncommitted buyers and sellers. Same concept. I take issue with that construct. The business is okay, nothing fantastic. And the sellers from here to 50 are monsters, but the breakout is also monstrous. So respect the silliness of the expectations. Like, there might be people out there that think it's going to 62 because that's where it fell from and there's a gap somewhere. You don't want to lose money to those people. But if you're shorting it with a cheap put, go for it. You have prior sellers here. If you're going long it, go for it with a tight stop. So you buy a call or shares or however you want to go long and say, okay, I'm risking $500. If I lose this much, I'm out. Pick a number you're comfortable with. I'm not recommending $500. Everybody's different. And make sure that you know how to stick to your rules of exits. Uber. Okay, so has a prior fail and should have had a small dip, but the market's Friday. Let's see how it digests the Friday goosing of the market. So you can see how it was working exactly like we thought it would be, languishing here. And then the headline came out at 10 a.m. Eastern, and the whole market took off. So this is like the S&P. If you look left, the S&P is at the highs, but not quite. The Dow is at new highs, and the NASDAQ is below. So this one is like the S&P. We'll see how that digests this week. If you took the iron condor, both sides of my setup, you're fine. The upper side is also still fine. We can deal with it. Do me a favor, pop into the live room like Monday or Tuesday. We can discuss it live, and I'll explain to you every variable in this setup. UNH, it's not for me. The last time people chased Warren Buffett into a stock, they lost their butts. But the difference here is that they're buying UNH, a stock that's been demolished. And if you're buying it now, it's no longer demolished. It's miles off of the lows. I'm referring to Oxy. A few years ago, Oxy went to the moon because he was accumulating positions in it. Well, I've got a wake-up call for most people out there. We are not whales. We could not be that confident or cocky to trade like whales. We have no idea what he's doing with the options contracts. He could be selling the schmutz out of it to finance this position. So I wouldn't trade like Buffett. I would use the Buffett mentality to trade my own logic. But to pile into UNH now because Buffett bought it, that's the wrong reason. To pile into UNH at 230 because you thought it was an awesome deal and it was a prior buy the dip area. Look at this. You can't make this stuff up. That would be a right deal. I know some of you are long already. They bought the dip. They suffered some, but now they have a sigh of relief. So here's the thing. If I went long on the dip here, and then I got buried, and then now I'm green, I would say, thank you very much, I'm out. Or I would reduce my position drastically just in case they want to dump back down. I don't see why they would, but I'm just saying. If I was long here, super red, I would be out here, or at least make it bulletproof. UPS, I don't remember if we went long. The drop was phenomenal. I do believe I sent out a trade. It sounds familiar. And I may have said I don't like it for me because they disappoint me with headlines about labor and all kinds of stuff. Resistance, 95. Resistance, 93. Resistance, 91.5. And 90. So 90, 91.5, 93, and 95. So I wouldn't buy calls for it. Okay. And support, anywhere below 86. In fact, 87. If they lose 87, I'll start saying, what's going on? And 85.7. Let's put a line there. I definitely do not want to see them losing 85.7 to those. Say I'll put a line here. Warning. An alert. Oh, wait. I think they have an alert system inside of this one. Anyway, we'll do it later. So now you know the upside potential. Now you know the downside warning. 4Us. Wow. It's quite a ticker. Well, it's going into a prior fail. Logically, they will try to sell it here. If not, they will go to 1130, 1160. That's quite a U-turn right here. Dips into 9.7, should find buyers. Dips into 9.2, should find better buyers. And 8.9. And you don't want to lose 820. Vertiv. This is a good long. You might get 138. And a lot of resistance at 132 on up. And support at 122, backup support through 114. This trade doesn't work if they lose 112, which is where there's a lot of buyers. So that I would sell a put spread with confidence here on the stock if I knew that it was somewhat of a stable company. What do they do? Critical digital infrastructure, data centers, of course. So yes, this is available. Resistance zone inside of this. And you have a couple lines of support. You do have weak areas all the way down to here, but we're just talking the next couple weeks. Workday reported I don't know how can someone react all the way up to 240 and down to 210 in one day based on the same headline. Not in one day, in the span of minutes. That's just insane. So the problem with that is that you see that giant green M that says maybe we can go to 250. Well, they hit target 1.5 in 1 minute after hours. So how are they going to overtake that? A problem is now at 225 or higher. And the higher you go into that wick from the earnings, the harder it is to get there. And you do have a solid buyer at 207 and an even more bigger buyer at 202.5, whatever it happened back in April. But think about it. This stock is struggling to hold the April lows. Just think about it. The April lows were a phenomenal dip like we haven't seen before often. You don't see those often. And this one is trying to hold that floor while the market is exploding into an all-time high. Not a good look. So I would use rallies to exit. Credit put spread is fine. Calls reluctantly. So do one of these to finance a call spread maybe. Wally World. That's a healthy dip on Wally World. I don't know why they're falling. Oh, the earnings. Yeah. So check it out. The May earnings box. This was one candle, this blue box. Look left. It's one candle. Here's the May earnings. Look, I love it. No, wait, I hate it. No, wait, you know what? I don't know. Let's stay in the middle. And then they go, I love it. I hate it. I love it. I hate it. I love it. I hate it. Whoa, let's go. Nope. Back into the box. See all the green lines? We have supports all the way down to the blue box. So the market wants to go to the moon, and this one is back in the base. Credit put spread, yes. Debit call spread, combination with a credit put spread. So I'm not out money out of pocket, yes. Calls reluctantly. You might get a bounce to 99. But how much more excitement in the market do you need for you to have a green tick? Sellers, 99 and 100 and 101. Buyers and target is probably 95.5. Better buyers at 94 or lower, and that would be the long wick for the earnings from May. You do have risk down to this area. What do I mean? This is junk, so you might want to go investigate. I don't think it does it alone. It needs the market. XBI, almost like UNH. Every comment I gave you at UNH would work here. I think these are like still, look at them. They are well off the highs, right in the middle of the whole zone. They lived up to every downside potential. Target, they met it and overshot. Resistance, they just dealt with it. Target from the like old resistance. So now the letter R, I would move it to here. So I think there are sellers into, I didn't bother putting these like this is all resistance. I'll move the letter R inside of it. The easy work is now done. Shorting it, they have a good trend. They're in the buy the dip trend. XLF. Everything I said about Bank of America applies here with a giant caveat. This is not a bank. In fact, only 2 charts in the top 10 or 8 are banks. So we have Wells Fargo and Bank of America. The rest are not banks. The biggest component, Berkshire. Second, I believe, JP. Then you have Visa, MasterCard, Bank of America, Wells, Goldman Sachs, and SPGI, which is the S&P ratings agency. So Goldman can take it to the moon. JP can take it to the moon. Bank of America is in a breakout. Remember I said it's breaking out of a broadening wedge? This one as well. So it's imperative to see what they do at 55. 54.5 to be exact. Very interested to see what they do this week with that. Tempting to buy a put. This big red W on my screen, this one right there, says that they come down, but they already hit targets 1 and 2 once already. I don't know if they can do it again. So this red W has played out once already. Target 3 of that red W is 49.50, but boy, that's a disaster. So bulls are executing a breakout. If you want to pick a fight, you should wait a few ticks to see how the next few days transpire. ZETA. Going into a prior fail, trying to break out like the XLF, but these look like pretty terminal bars. Anything above 20 has been sold hard. Conversely, anything below 17 should be bought hard as well. And support grows as you go lower into 15. Okay, you do have a weak spot at 1350, but that's miles below. So you have tight support below and a lot of resistance. So if you take out 21, you can go to 23. And with that, we end today's video. Thanks for watching at home. Come join us in the live.